One sec. We're going to go through the entire presentation. I have got an awesome trade of the day for you. Just looking for the all clear. I think we should be good. Well, so we're going to just keep on rolling. We are good now. I'm not sure how much you caught, so I'm going to hop on once again and say, welcome to Masters in Trading Live. Jonathan Rose, every single day, we're going to get on here at 11 o'clock Eastern Time. We're going to go over the market, and every single day, we're going to share our trade of the day. Today, we got 4 topics. The first thing we're going to discuss is those QQQs. We've been covering them for 2 weeks. We've been sharing what we call our line in the sand. A line in the sand is one powerful number. Above bullish, below bearish. Next topic, so important. Let's talk about buybacks. Buybacks from a little different perspective. Then talk about discounts and premiums maybe. And then finally, we're going to go into our trade of the day. So without further ado, let's get to those charts. And some great feedback, and many of you have been taking those insurance plays and capitalizing as the market sells off. It sounds like the first time many of you guys have done these short-term insurance plays, so good for you. That's awesome. I'm proud of you. But when this VIX 9D stays nice and strong, oh my God, we're having some fun today, the market's going down. Okay, this is a very, very flat VIX term structure. VIX 9D, when it's trading under 15, market's going up. When it's trading 19, the market's going down. Okay, market is heavy right now. We are under that key line in the sand. If you need to, go back. Watch those previous videos. Watch how we looked at that 433 level. What we do every single Friday is we go over the portfolio. Now, we've been sharing trades every single day, and what ends up happening is we get a whole bunch of trades. Now, here are the open trades. We have taken off 7 trades, so 7 trades are not on here. They're closed. All 7 of those trades, well, the average of those 7 trades was 125% return, but as you can see here, as the market's pulling back, we're getting in a little trouble in our portfolio, but I want you to stay confident. We are going to be okay. I got a question about Katos. Now, Katos, great question from Robert. And the question with Katos was, if we don't get filled on our long out of the money trade and that expires, what do we do? Do we still want to be in Katos? Katos, I am extremely bullish. I like owning the stock in Katos. Stock right now is trading, where is my Katos? 1762. So we're long stock, but what I also like to do is I also like to buy some upside calls. It's like 2 different trades that we're able to do. So the other trade is the July 20 calls. Buying those right now, you can buy them for $1.25. I think you could do a little bit better, maybe working a $1.05 bid or a $1.15 bid, but you still have 91 days in Katos. The takeaway, Robert, get long Katos. We want to be long combat drones. I do want to cover one of the positions, MSOS, cannabis ETF, These long option trades, when we see opportunity to make a big profit, nothing wrong with taking that off. We got in this trade at 67 cents. Today, the 9 puts are trading $1.05. So let's lock in that profit. Lock in profit buying MSOS for 67 cents, $67 of risk. You can never lose more. And now we're going to take that off for $1.05. So 67 cents turns into $105 per contract. As many as you want to do. QQQ got down to its 100 period moving average. QQQ right now is about 419. Now, this is the lamest sell-off that I've seen in some time. Qs, to me, and I don't know what you think, but it feels strong. Usually when the market comes off, you see some velocity, some strength, but there's nothing. QQQ does keep leaking. Sadly, the global news is not getting any better. But when this rallies, I want you to use that 433 line in the sand. That's going to be resistance. But if we can get over there next week, we are going to see a rip your face off rally. 433 resistance. Check on that for next week. I want to talk about shareholder buyback. Shareholder buyback is when companies buy back the stock. Why would they do that? What's the benefit? Well, it reduces the number of outstanding shares, increases shareholder value. You want buybacks. You want the company to buy back the stock that you own. It signals confidence. When a company continues to buy back its stock, they're confident. They want to own that stock. They see better value owning the stock than leaving the stock out there in the market. There could be some tax efficiency plays. Flexibility in capital allocation. It gives the company flexibility, allows them to manage their excess cash, and then also allows them to optimize the capital structure. Now, buybacks have been a pretty big topic over the last 10 years or so. We've seen a ton of buybacks, especially with the very inexpensive capital that we got to see before the Fed started moving rates. But this is what I want to show you. I have gotten some feedback that this is tough to read. I will make this super, super clear. I will eventually get the option so everything is clear. I was traveling all last week, so I couldn't make changes. But I am getting your feedback, and I know having a black background on some of this is difficult to read. So let me walk you through it. Buyback yields. Number one is Alphabet. Alphabet buys back so much stock, the effective yield of their buybacks is 3.19. They don't have a dividend, but just the buyback yield alone is 3.19. You could see Apple 2.99, but they also have a dividend yield. These guys buy back a lot of stock, right? Pretty much the top companies in the world: Alphabet, Apple, Broadcom, Visa. You may be thinking, okay, cool, John, let's move on. You might be thinking, so what? Let me tell you, so what? You know what the so what is? Ethereum. What makes Ethereum different than Bitcoin? It makes money. Ethereum net income, $847 million. But not only that, Ethereum doesn't buy back the stock, doesn't buy back the coins like Apple, Broadcom, or Alphabet. It's even better. It burns that stuff. In the last 30 days, a total of 76,166 Ethereum coins have been burned. They've been destroyed. As a matter of fact, every minute right now, 1.76 Ethereum are burned. Now, why is that important? Actually, before I get into why is that important, where are they burning it? Why are they burning it? What is the activity on the Ethereum blockchain that's so busy? Well, Uniswap is very busy. Uniswap allows people to switch coins, very similar to using like Coinbase, but it's all decentralized. Transferring ETH, MetaMask, this is NFTs and other stuff, but this is how active Ethereum blockchain is over the last 30 days. What do we have here? ETH supply 2-year projection. Now, we go back to the merge. This is going to be the happening today, right? So Ethereum 2016 supply was getting bigger and bigger and bigger. Then they put the burn mechanism in there, and the burn mechanism is what makes Ethereum deflationary, because after 2023, it is going to be deflationary. But what I want you to see is the makeup, the projected makeup, because this green line is the validators. And just like US government bonds are backed by the US government, right? Ethereum is backed by the validators and the money that's locked up in the contract. The validators is going to be extremely illiquid. This is going to be locked in. So Ethereum is going to get very, very, very deflationary as time goes on. What we're looking at here is the GBTC premium discount to NAV, grayscale. Because Bitcoin now has an ETF, the grayscale premium to discount to NAV, the ETF, has gone from a low of 45%, and they closed the gap once that ETF. Not surprising. Ethereum, same thing. As the ETF came on board, it closed the gap. But they only gave us a Bitcoin ETF. It's not yet approved for the Ethereum ETF. They will. It's happening overseas. Right now, Ethereum, this is on grayscale looking a year back, spiked up. We got some sell signals. This is just 3 and 4 standard deviation bands. Right now, it's getting darn close to getting buy signals. The trade that I like, buying ETHE, buying it at the market for $21.98. Why? Because we're buying this at a 20% discount to the price of the coin. We do have a position in ETH already, Ethereum, the coin. We are also going to have a position in ETHE, $21.98. We are bullish Ethereum, but especially these grayscale products before that ETF is approved. Sorry about the little snafu when we first hopped on here, but important information inside. If you're still not yet long Ethereum, I'd strongly consider getting long at these levels. I'm a big believer in looking at the market from a different perspective. The creative trader wins. Look at things different. My name is Jonathan Rose. I'm the founder of Masters in Trading. I'll see you live 11 a.m. Eastern Time on Monday.
Join us every weekday at live.mastersintrading.com